Good morning, welcome to CATEX TV. My name is Frank Fortunato. Today is Thursday, June 14th, 2012, Flag Day in the United States today. Here's a disturbing comment from the new Lloyds chairman, John Nelson, who comes from the banking world. He said that the 300 million pounds, or about 460 million US dollars, that cost the Lloyds market to implement Solvency II should have been far lower, and the process for implementing the new regulatory regime has been, quote, extraordinarily painful. He said it's been an extraordinarily painful process. It's cost Lloyds about 300 million pounds, and it should have cost a fraction of that. He spoke yesterday at a London conference at the Association of Lloyds members. No comment yet from the people who spent that money when they were responsible for complying with what looked to be the regulatory regime that was imminent. Meanwhile, coming from Europe as well, the European Insurance and Occupational Pensions Authority, EIOPA, the overall European supervisory group for insurers, has said that both the capitalization and profitability of insurers is on a decreasing trend. They said that despite being well capitalized under the original Solvency I regime, insurers are now facing a number of issues that could trouble them in the future. One such issue is the continuing low interest rate environment, along with the failure of governments to rectify their fiscal situations. Total adherence to Solvency II, of course, would accelerate that decreasing trend. Well, we were in Bermuda last week, and we spoke a little bit about the influx of new capital money coming into the marketplace. And to the second day yesterday of the Insurance Day Bermuda Summit, it was the prime topic. The influx of investment capital into global insurance markets could be a game changer, according to executives who spoke down there yesterday. A panel of Bermuda-based CEOs yesterday agreed that the deluge of capital from investors hoping to see sizable returns is changing the dynamic of the industry. The CEO of Altera said there's been a deluge of capital into our industry even in just the last 2 months. Collateralized capital is coming in via several directions, not only cat bonds and insurance-linked securities, but also from capital managers. Hedge funds, private equity, and pension funds are looking for investments with better returns and less volatility than the traditional capital markets. This is also called non-correlated risk. One of the most interesting comments came from Keane Driscoll, who's the new CEO of Validus Re. He said that if clients begin to change their buying habits due to the influx of new capital, and move away from traditional treaty reinsurance products to alternative structures such as cat bonds, then expect big changes within the industry. Driscoll said, if this is a dynamic we have to deal with, then I think what we'll find is that a lot of traditional rated reinsurance capital will leave the industry, and reinsurance companies will start to manifest themselves into more asset managers, positioning themselves between buyers and capital providers to leverage their opportunities. Mr. Driscoll needs look no further than some of the nameplates on Front Street and Victoria Street in Bermuda to find people who are doing just that and doing it very successfully. The New Zealand Earthquake Commission has confirmed the renewal of $5 billion New Zealand dollars worth of reinsurance. The new renewal, as announced by the Earthquake Authority Commission's executive to Radio New Zealand this week, also came with the news that the additional cover cost 50% more than it did last year. That's no surprise given the spate of earthquakes that struck Christchurch. Berkshire Hathaway played a big part in the cover, putting down lines of about $500 million New Zealand dollars. The Cincinnati-based U.S. insurance group Great American is going to hire the CEO of QBE's Australia Asia Pacific unit, Vincent McClenahan, to head up its international P&C operations. He's going to join at the end of July. Great American's parent, American Financial Group, is also the majority owner of Lloyds Syndicate Market Forum. And Citizens Property Insurance Group, the Florida state-backed insurer of last resort for hurricane cover, had a better than expected response to investors from its pre-event bond sale. The muni bond sale was increased by 20%, up to $1.5 billion yesterday, significantly higher than last year's $900 million sale. The 10-year notes mature in 2022, and they offer a yield of 3.77%. Of course, that's only assuming no hurricane. At least 10 people were killed and several others seriously injured in an explosion at a steel factory in southeastern India. The state-owned Rashtriya plant, situated in the town of Visakhapatnam in the state of Andhra Pradesh, about 360 miles from Hyderabad, saw a massive explosion. 10 people are very seriously injured in addition to the 10 who died. 2 earthquakes of some note. A 4.1 quake struck Southern California last night. It was near Yorba Linda, did some shaking but no damage. There was also a 5.5 earthquake in southeastern Turkey, near the Syrian and Iranian border. 2 people were injured jumping off of buildings in panic. Iran's biggest oil tanker operator claims that it has $1 billion in ship insurance cover to keep its fleet in the water and serving clients in Asia. This despite Western sanctions on Iran's oil trade. The tanker operator NITC made the claim yesterday. He himself declined to be named. He spoke anonymously. He said, "We can trade with no problems at all everywhere in Asia." In April, 2 Iranian-based shipping sources said that Iran had been forced to deploy more than half of the fleet of those tankers at anchorage to store oil, equating to about 33 million barrels. Other industry sources have estimated that Iran could be storing many times 33 millions of barrels in oil tankers. They have no place to deliver it. In what could be shaping up to be one of the worst wildfire seasons in the United States in recent memory, insurers are scrambling to deal with the aftermath of several big fires out in the Midwest, and they're preparing for more to come. According to the National Oceanic and Atmospheric Administration, about 20% of the U.S. fell under severe to extreme drought conditions as of the end of April. We're really just at the start of our severe season, said the executive director of the Rocky Mountain Insurance Information Institute. Given our fire danger, I wouldn't be surprised if it becomes a tragically historic season. Massive fires continue to rage in New Mexico and Colorado, with small but significant fires throughout 4 other western states. That's the news for today. If we have any breaking news, we'll come back and tell you. Thank you for watching. We'll see you tomorrow.